So today, one of the major concerns with payment systems and with issuers in general is disparate and duplicate systems. I think this haystack picture is really a great example of what's going on within the banks. Banks have built many different systems. They've built them separately and essentially in silos, right? So not only are they built in silos, but they have a limited ability to talk to one another. And they have been built on disparate platforms and not in an integrated fashion. So now they are trying to join them all together, utilize what they have, as well as customize them for their needs that they currently have. So they've been building code on top of custom-built systems that are really very hard to operate as a consistent, integrated process across many different platforms. So when we talk to issuers, one of the things that we actually learn is about their frustration with their technology capabilities. And you can see from this particular chart that most of the firms in the market today are very dissatisfied with their technology capabilities. In 2012, we interviewed a ton of banks, over $10 billion in assets. And out of this, you can see that 54% of them were pretty dissatisfied with the systems that they are running internally. A lot of what's happened with these big bank systems and why they're dissatisfied is because essentially what's happened is they've built what I like to call spaghetti code. But this particular picture shows really what we've got. We've got a network of different solutions all coming together, crazy tangled wire that has been customized to the point where you can't figure out what wire goes into what port. It's not recognizable any longer. So because these systems are not recognizable, they're very hard to enhance, and they're very hard to use, and they're very hard to integrate. So that stays with our theme about what kind of ability they have and don't have with their current infrastructure. 45% of all the banks say that they tend to customize their solutions to a great deal. So what's actually happening is that banks are buying off-the-shelf solutions and customizing on top of it. So 45% are doing that. About 38% of them are doing some level of customization and some level of architectural improvement and trying to leave some of those off-the-shelf solutions the same. And then only 17% of them are really trying to stick to what they had originally bought and avoid the customization altogether. So when you start customizing these different solutions, they become much harder to integrate, and then the implications of programming down the road for launching new products becomes much more complex because you have to look at all the different variations and possible outcomes before you release a new product to market, slowing the whole process down. And that's, I think, one of the key elements here as to why banks are dissatisfied with what's going on with their current solutions. So what we've seen actually is a shift on their desire on how to go about building new internal solutions. And the shift that we're seeing is that they're going to start focusing on spending more money on buying off-the-shelf software solutions than building things in-house. And that they're going to be spending a lot of money, actually, on buying new software. And part of the reason that they're doing this is because they want greater flexibility to be able to release new products and features in an expedient manner into the marketplace. And across the different product areas, 43% of the banks say that they are likely to buy new software over the next 24 months. Another change that we've seen in the market over the last number of years is how consumers actually interact with bank issuers and with payment companies and with banks in general. So what we've noticed, right, is there's now a full range of ways that consumers can talk to banks, talk to issuers, talk to payment folks in general to manage their account, to acquire new accounts, and to do business, right, and make purchases. So it's not just walking into a branch anymore as the major way to do business. They can do business online. They can do business via smartphone. They can even do a lot of business over the ATM. So being able to get the right information to the consumers in an expedient manner so that they understand what's going on with their account across multiple products has been a source of major pain in trying to integrate systems. leading us to the thought process that really what consumers want is a seamless way to do business with us, and what bank issuers want and payment hub issuers want is also a great way of being able to get the right information out to the consumer in a consistent and cohesive manner so it shows up the same in every format that the consumer chooses to interact with us. That thought process is really captured here, where we see that 74% of banks are completely dissatisfied with their multi-integration approach to their services. And over the next 24 months, half of all these banks will be increasing spending on multi-channel integration, whereas also more than half have this increased need to try to be more stellar in their approach to how they launch new products into the market and new feature sets. And that stellar topic is really very important. What it talks about is its speed to market, flexibility, and the ability to enhance and change product information on the fly, such as like with pricing or with features, and being able to add new feature sets to consumers regardless of the channel that the consumer tries to access with. So on the next slide, if you take a look at this, banks have really worked hard at trying to build integration models across channels and across products in-house, and trying to move business away from their branch networks to try to leverage the other distribution channels to the best of their ability. And if you notice, where we talk about multi-integration, which is on this bottom line over here, you'll see the dissatisfaction that most of the banks have is running at about 74% dissatisfaction rate with the capability across multi-channel integration, as well as their desire to be stellar in market. Again, speed to market and flexibility of the product offerings. So you can see that 64% here is what they want. Is it 64% of the banks want to be able to be stellar versus 36% saying that, it's just got to be good enough. But no, the desire is really to go further. Over the next 24 months, you can also see how 50% of them claim that they're going to up their spending versus 44% that are staying flat. And finally, in this last column, you can see where the emphasis is going to be put. It's going to be buying new software products. 61% say they're going to buy new software products versus 33%, which is the next highest number, which is going to be building new solutions in-house or bringing things in-house or outsourcing or hiring IT services. So really here, again, this is about the desire to be able to build different modules, add-on systems in a quick and efficient manner. One of the objectives for the enhancement in the technology today is that it needs to be easier to implement, easier to integrate. It's got to be able to support the needs of the business rather than being able to configure things in a customized manner. So, and what we mean by that is that it's really got to be a turnkey solution that business people can use, and there's got to be a shift between the programmers who are programming solutions versus the business people that own the P&L, drive the business decisions. They're going to become the main user group, and they're the folks that are driving the decisions in the business. So they need to be able to make the changes on the fly, to be able to be responsive to customers and being able to accept all the information and all the analysis based on the behaviors that the consumers actually demonstrate on their products. So enhanced technology means being able to leverage the configurability by the business people, shorten time to market for new solutions that are coming into play, and really being able to shift back to the business folks who own the business to determine how the process should work, what the hierarchy should be, and what the priorities are with the business. Over the next 24 months, the payment area is where most of the banks are going to be focusing. And really what banks want, again, is they want an integrated solution that's going to run across multiple channels, multiple access points, and multiple products. That's really important in the payment space. It's about the ability to integrate the processing of payment tools, all of them, credit, debit, and prepaid, on one system and being able to do it seamlessly across and leverage the commonalities between the processing and the authorization systems, as well as on the card issuing side. So all the new account opening features and all the tools that a consumer may use should be seamless across different product types. There might be nuances in the way the products behave, but from a consumer perspective, it should all look and feel the same. So here on this last page that I've got, we talk about how 93% of the banks are dissatisfied with their mobile wallet services. They just have not put as much emphasis on building out these solutions, and that's going to be the next wave that needs to be integrated into the payments hub. 69% are dissatisfied with the current payments hub infrastructure. So now you can imagine what it's going to be like to add a digital wallet service on top of a system that's already aged, disparate, and not functioning at the level that they want to be able to do. 60% are also dissatisfied with their peer-to-peer payment capabilities. Many banks today don't even offer peer-to-peer payment capabilities. And again, that's going to be one more function that consumers are going to be able to want to take advantage of that has yet to be integrated into solutions that are currently in market. And finally, on the last bullet point, the prepaid market, which is the fastest growing payment market in the mix of payment card issuing services, we've got more than 50% of issuers being frustrated with the capabilities on their prepaid side. So what we're finding is that a lot of these systems are continuing to operate disparately. They're continuing to be customized, which diminishes the ability to add new features, functions, and flexibility within the system, and it slows down their speed to market. So by building an integrated system that supports multi-products, multi-channels, and multiple access devices, issuers will really be able to make strides in how they approach the consumer market. With that, I'm going to turn over the presentation to my colleague Shirley Insco that's going to talk about issues relative to risk and fraud in the market. Thanks very much.
Thank you, Madeline. Bankers who are involved in the day-to-day world of fighting fraud, either in fraud prevention or in loss recovery, will tell you that they are seeing a huge uptick in all types of financial fraud. Now, that doesn't necessarily mean there's a huge uptick in losses, but what they will tell you is that they see a huge uptick in the fraud attempts that are being perpetrated out there. And again, that covers all types of payments and all types of delivery channels. In the third quarter of 2012, ACI Worldwide did a consumer study in over 17 countries where they asked consumers a number of questions about whether they had experienced fraud and then their reactions after experiencing fraud, if they had. This first slide that I want to talk about shows the percentage of consumers by country who responded that they have experienced card fraud in the past 5 years. And you can see here that Mexico and the United States led the way, both over 40%, while the Netherlands and Sweden had the lowest rates of card fraud at 12%. And by the way, this particular graph does include prepaid, debit, and credit card fraud. So it was any kind of card fraud that they had experienced. Now, on a global basis, that meant that 1 in 4 cardholders experienced fraud in the past 5 years. But if you look at North America, particularly Mexico and the United States, you'll see that 2 out of 5 consumers in those 2 countries experienced fraud in the past 5 years. As further evidence that the rate of fraud is really increasing, ACI asked in both of their annual studies the question of consumers, have you experienced more than one incident of debit or credit card fraud in the past 5 years? In 2011, only 6% of consumers said that they had experienced more than one incident. But in 2012, that percentage rose dramatically, and 14% of consumers replied that they had experienced more than one incident of debit or credit card fraud. I think that you don't have to be a statistician to realize that that is a significant increase from one year to the next. And as I said, it's really evidence that the fraud that is being perpetrated is increasing. I'd like to talk for a second about the state of technology that's used to combat fraud. And if you've been in this business for a number of years, as I have, it's easy to understand how bankers arrived at the situation they find themselves in now. Literally, when fraud started becoming enough of an issue for executive management to begin creating departments to fight it and invest in technology to prevent it, there were just a very few types of fraud and, frankly, just a very few types of delivery systems in place at that time. So what we've seen over the past 3 decades is a real increase in the number of delivery channels that we offer consumers, and as a result of that, or just in line with that, we also see a wide variety of the types of fraud that are being experienced. So as these types of fraud expanded, bankers made investments to fight that kind of fraud. In other words, wherever they were experiencing the most bleeding, that's where they invested to fight it. The result of that, though, after 2 or 3 decades, is that there is a real hodgepodge of point solutions, most of which don't have any integration whatsoever, and none of which speak to one another, so to say. There are a lot of new technologies out there to help fight fraud, but many of them have not been broadly adopted. And with our current economic situation, particularly here in the U.S., there's been a lack of funding or a lack of investment capability to really implement new solutions to fight fraud, and budgets have remained flat or even been cut, so that often there's a lack of available resources who would either, from an IT perspective, help implement these new solutions, or from a day-to-day operations perspective, work the output of such new systems. The environment that we're in here in 2013, I talk to bankers constantly as I do research and as I seek to understand what their situation is. And I'm hearing that they are really trying to juggle a large number of types of fraud and have a lot of gaps they feel they need to address. Mobile banking is new. They will admit that they really don't fully understand all the risks associated with it, but they are taking steps to cover the things that they know they need to cover. Online account takeover continues to be a major source of pain, as does cross-channel fraud. Earlier this year, I did research in the area of call center fraud, and I talked to executives at 19 of the top 40 banks in the U.S., and they told me, many of them told me, that the fraudsters are well armed with a lot of information gleaned from data breaches, from Facebook, from various online sources, et cetera, and they're calling into call centers using social engineering tactics to gain the missing elements they need to successfully then go to the online channel and take over accounts, or to open up online banking for customers who've never had it before. So we're seeing an instance there of cross-channel fraud involving the call center almost as a tool they're using to then commit fraud in the online channel. And much of this is committed by organized crime rings, which are more sophisticated and doing business more than ever before. Identity theft is on the rise, as I mentioned, with a lot of the online account takeover. We're seeing fraud in remote deposit capture, and I could go on and on. But these are some of the priorities that bankers are having to juggle. And in many cases, they're using a case management as a way to try to obtain a customer view and to really understand what is going on with this customer. In other words, did they just change the address before they ordered that new debit card that they want mailed to them, or things along this line where they really need to have a fuller picture to understand and successfully prevent the fraud that is being attempted. This slide is really just a pictorial view of what I was just talking about. And in addition to all of these solutions that you see that may be in use in a particular bank, of course, there's also been in-house development along the way to combat fraud in isolated cases. the result is really a very disjointed, fragmented approach that has evolved over the past 2 to 3 decades, but which banks are reliant upon in order to try to combat these fraudsters. And it's a very different scenario, because if you look at the fraudsters, they have unlimited budget, they have unlimited resources. They can, go into a chat room online and engage additional people to help commit their frauds. And they are really using technology to its fullest extent as they continue to evolve these schemes, create new types of malware, et cetera. Yes, I know this is terrible, but bankers really don't have the luxury of resting on their laurels. I just couldn't resist this when I saw it. I know it's a terrible joke. But the fraudsters really are innovating at a very, very fast pace. And so bankers, therefore, have to be able to somehow figure out how to take advantage of new technology and new methods to stay a step ahead of them. And that's really difficult, because bankers typically often have to incur major losses in order to create a business case that then allows them to invest in technology or in a new solution, whereas the fraudsters they're combating are able to be very proactive. They don't have to be reactive, as oftentimes bankers find they need to be. And one point that I'd really like to stress is that speed is increasingly critical in the fight against fraud. Obviously, in fighting fraud, if you can prevent a loss, that is the best scenario, but oftentimes that's not the case, and so then you're chasing funds that have left your financial institution. The faster you can become aware that there's been a fraud committed, the more likely you are to be able to recover those funds. So literally, time really does equal money in fighting fraud. And one potential key to success in that fight against fraud is integrating improved prevention capabilities into processing systems. One thing that's really key there is that it enables real-time capabilities of combating fraud. And real-time is really, really important in this scenario, or at least near real-time, in detecting that fraudulent transaction and preventing it from being authorized. In addition to that, it may allow you to upgrade and replace a current point solution that you have in place if you're able to integrate this into your authorization system, your processing system. Systems integration also enables a complete view of all of the data associated with the transaction, so you're not reliant upon a file that you extract to send to a point solution. You can have access to all of the data associated with it. And often, that integrated solution can reduce deployment and training time, because you're implementing your fraud solution as part of your processing system. It's not a separate business case that you have to put together in order to implement a new solution. And then issuers are looking for an integrated solution to help them respond on the fly to new fraud schemes. When you're able to detect a new ring that's acting in a market, you're able to take swift action to limit not just the losses, but also the number of customers you have who are impacted by that fraud ring. And with that, I'm going to turn the presentation back over to Paul.
Thank you, Shirley, and thank you to Madeline as well. It's all a little bit doom and gloom, but I don't think it is, in all honesty. I just want to speak for 10 or 15 minutes. I know everyone's quite busy these days. But I want to start my section of the presentation by talking about the results and what can be achieved. So first of all, you can have an end-to-end retail payment solution. So the issuing system isn't standalone. It's integrated with your dispute system. It's integrated with your fraud system, as Shirley mentioned. And it's also integrated with your payment engine as well. And we all know the benefits, and both Madeline and Shirley pointed out they can control your IT costs and reduce your fraud rates, which ultimately help protect margins, which are being squeezed continuously. You can have flexibility, and as Madeline said, it's no longer just the IT guys who want to make changes, it's also the business guys as well. So flexibility to move into new markets, whether that's a new market segment, such as prepaid, or a new geography as well. And with that, so you can have your choice to markets, you're not restricted by the technology. The business guys can say to the folks in IT, I need a new product developed through configuration. The IT guys can help solve the business problem quite quickly. And I have a quick thing about me. I have 18-month-old twins, and so I know the value of a very good night's sleep. And you can have all this great, exciting stuff, flexibility, choice of market. We also need to build it on peace of mind. So when I talk about peace of mind, I talk about it from a fighting fraud perspective, from a performance perspective, from a reliability perspective, from scalable as well. So you can have a good night's sleep knowing that you're issuing systems in good hands, and also it's helping you control IT costs by frauds and bring flexibility to the business owners. So kind of going back, so that's, think of that as this is what you can do. This is where you're coming from. I just want to summarize a little bit from what I heard from Madeline and Shirley, and provide my own insights as well as ACI speak to a lot of our customers and prospects around the world. So the big challenges which we're seeing is the massive need to reduce overall card processing costs and reduce them dramatically. Continuously being squeezed from regulations, most notably in the US with the Durbin Amendment. And there's a dramatic need to reduce these processing costs and also increase revenues. You all know that you live it day to day, but you can't probably reduce, or you can't reduce IT costs due to your legacy systems, and you can't increase revenues due to limited use of your existing system. So we think the solution, you need a modern SOA-based card issuing customer management system. You have disparate solutions serving different market segments, whether that's 2 or 3 different issuing systems for regional or international banks. In the case study later on, which I'm going to show you, one of the customers went from 23 systems down to one issuing system. Also, you need to think of prepaid, credit, and debit as 3 distinct markets which can be served from the same issuing platform. And that's a solution which we recommend. You're enabled to issue new products quickly, as I mentioned. That's one of the negative parts of having a limited, outdated system. Customers talk to us a lot about prepaid and how they wish they'd gotten sooner. And as we're preparing for this webinar, Madeline shared the statistic about prepaid, which she mentioned earlier in the presentation. There is a significant boom in prepaid cards right now, and with the heightened financial sensitivity in the customer base, there is a need for greater innovation. Later on, I'll talk about a quasi-credit prepaid card. It's quite interesting, one of our customers has done. And EMV support, I know there's a lot of people from around the world on this webinar. It can be quite daunting or seem quite costly to add EMV. A lot of banks in the US are very focused on the cost of EMV and don't really exploit the full EMV capabilities. We have customers around the world who also don't exploit the full EMV capabilities. So are you supporting virtual and one-time use cards and really expanding on the capabilities of EMV, where you have super niche marketing, so going from 6 customer profiles all up to 27 customer profiles, or you're offering one actual physical card which can have debit and prepaid capabilities on it. So EMV is not just about cost, but there is an upside to it as well. And finally, the big challenge we see is that the system must enable the business owners to be innovative. And when I talk about innovation, does it let you do P2P payments? Does your system allow you to offer a digital wallet? And what we really think you need from an issuing solution is committed R&D from your solution provider, or in-house if you have an in-house system, to really future enable your system. I know that's kind of a cliche, but if you look at what you have today, and maybe it's 10, 15, or 20 years old, is it really going to be set you apart from a competitive standpoint in the next 5 or 10 years? So I want to talk about a couple of case studies here. One of the banks we have, they had a challenge of they needed a new card issuing and clearing settlement platform, and they wanted to start issuing credit cards. It was PKO Bank in Poland. So the solution they had from ACI, they already had base 24. They implemented issuer and interchange working as one solution. Their requirement was to grow the card base from 0. So the results which they have, they quickly introduced a new card product. They issued 2.2 million credit cards. Compared to America, that's quite a small portfolio, but in Poland that is the #1. They are now the #1 issuer and fully integrated with that payments engine. So that was the revenue generation side. I did mention there's a cost reduction side as well. And this case study, the Bank of China, they really had 23 provincial systems, and they wanted to bring it all into one central platform. And each of the provinces in China, they all have their own regulatory requirements and mandates. They also wanted, using the same system, launch and grow their international credit cards, again from a 0 standing point. They don't only do issuing, you also do acquiring as well. So they wanted a merchant management and settlement solution consolidated from about 4 or 5 platforms into one. And they want a solution, talking of peace of mind, going from 0 to many millions of cards. And there's the solution they went with, again, obviously it's the ACI webinar, went with acquirer, issuer, interchange, and they have a proactive risk manager working in as well, which is a fraud detection solution. So the results, that's the background. The results are really fantastic. Over 200,000 merchants on that platform. They've reached over 50 million credit cards. Growth is still continuing. It's quite strange. I asked for a number back in September. They had 45 million cards. When I was preparing for this webinar a few weeks ago, they have 50 million cards now, so adding many cards over and over again. So I talked about payments innovation before. I want to quickly talk about this quasi-card. Essentially, it's a credit card with a guarantee deposit, something for the markets with no credit history or real infrastructure to help building such history. So, for example, it's a bit opaque. So when I moved to the US, if the bank issues a foreigner, such as myself, a credit card with $1,000 credit card line, I can start building up my credit history with it. In China, they would take 10,000 yuan as a guarantee deposit and give the customer an $8,000 credit line. And gradually they increase it to 9, 10, 12, and ultimately convert them from a quasi-prepaid card to a full-on regular credit card. So I want to quickly talk about ACI's global retail product. We offer everything from customer card management all the way through to transaction processing, an integrated payment fraud risk management solution. We also offer solutions for the payments back office and merchant management as well. So whether you want a small part of the solution, you can take components of it to suit your needs. So if you're solely an issuer of debit cards and are looking for dispute management to go with that, you can take the functionality you need to improve your business. If you have multiple systems and issuing 2 different types of cards, you can start issuing multiple cards from one platform. And in the US, with EMV coming up, you can leverage token management for this. So this, thinking of issuing, you can agree product terms, you can roll out mobile, P2P, you can authorize the transactions, you can acquire the transactions, and have a really first-class fraud detection system, interrogate the transactions in real time, and you can go out and clear and settle on transactions. So you can choose to do that by taking bits and pieces of the solution to fit your needs. And it's all underpinned by a very consistent payment infrastructure. So what are the benefits of ACI Issuer, which we're talking about today? I think there's a massive reduction in costs. You can leverage ACI Issuer and its components as part of an end-to-end retail payment solution to reduce long-term maintenance costs, whether installing the software when Issuer is part of a package. You don't have to do testing yourself, and you can manage credit, debit, and prepaid payment products with a single issue platform. You can also improve profitability, not just the cutting costs, but also driving new revenues. The example of PKO, they introduced a brand new credit card into the Polish market, and China had that very unique quasi-credit card. So you can create these new innovative and customized payment products and really start to expand your market share with a system designed for a global marketplace. And innovation, it is the key. It comes in every webinar. It's becoming a cliche, but what do you need to do? Your business shouldn't be limited by your issuing system. So you really should need a flexible rules-based product which can minimize your time to market and generate revenues faster. You should be able to integrate with the online channels via web services, which reduces your long-term maintenance costs, but can also provide new innovative products. And if you want to expand globally, you really need multilingual support for double byte characters. So if you want to start issuing cut cards at China UnionPay, you do need that functionality. So I just want to give a quick plug to our latest product release of ACI Issuer 4.4. It's integrated with Proactive Risk Manager, and essentially it's real good improvements to secure authorizations of transactions with real-time and near real-time integration. So don't get too complex. Basically, it's a synchronization of card and account statuses through message-based file updates or partial or full file refreshes with PRM and ACI Issuer. Talking about benefits, you will reduce fraud losses and improve your risk management. And ultimately, we're looking to lower costs with this solution rather than having multiple point products that you may have today. We also now have support for System P, and we're supporting third-party technology stacks. This is a lower-cost hardware platform, and it gives you the potential to consolidate platforms if you're an IBM System P shell. And for companies who prefer a Unix system, ACI Issuer supports the SOAR adapter on the Unix platform. And essentially what this is, this helps you integrate into your other bank systems via services, and would give you in the future the ability to leverage the Universal Payments Platform as an orchestration layer. The Universal Payments Platform is part of the technology we acquired from Distra back in September, and also some things we were working on internally as ACI as well. So this integration to the system via services rather than coding, we think that's going to lead to a reduction in long-term maintenance costs. And also, as well as Issuer 4.4, Interchange 3.37, which works very nicely with Issuer 4.4. That's also available as of the end of March. There's the support for American Express card acceptance and processing networks, or AmexCAPN, for those familiar with it. I think you can expand your revenue potential support for an additional network. So this is for acquirers and includes settled and non-settled program. Crucially, in the U.S., there's support for U.S. PIN debit interchange fees, which includes compliance for the DIP amendment. So ACI interchange can be used to really determine the fee based on a regulated or non-regulated card, and if a fraud prevention bonus should be applied. So if you bundle your PRM with ACI Issuer and you have interchange as well, you can really capture that 1 cent per transaction, which is massively important. And finally, integration with base 24 EPS. So what does that really mean? It means that transactions get to be extracted from base 24 EPS and processed through ACI interchange onto the clearing networks. Again, this is part of, Madeline talked earlier about these one solution to fit all your needs, and use the word payment hub. I'm not going to use the word describe it as a payment hub, but essentially this follows the same tenets, where things start working out of the box and you can fit it into your environment. So let's talk about the end again. An end-to-end retail payment solution, and you can control your IT costs and reduce your fraud rates. You need flexibility to move into new markets in as little as 6 weeks. There's another case study available on ACI's website with UBS, they started introducing a new prepaid card from start to roll out within 6 weeks. You should be able to have the choice of your markets, whether it's geography or credit debit prepaid, and you shouldn't be restricted by the technology. And ultimately, you want peace of mind. You want it to be reliable, you want it to scale to the needs of your business, and you want it to work. So that's all we have today, time for today. Before we open it up for Q&A, there is a couple which came through when we were talking. So the first question, I think this is probably for Madeline, but Shirley, please feel free to answer if you have any additional comments. This is probably from I'm guessing this is from a US webinar watcher. It says, are you seeing any issuers moving towards EMV? Has anybody started to roll that out yet?
That's a great question, Paul. And what we are seeing is a lot of issuers are starting to plan for EMV. They're starting to roll it out very selectively, primarily for cardholders who are traveling overseas. But for the most part, they're all in the planning stages of getting ready to convert over towards EMV. And I expect some of that to start happening probably closer to 2014, 2015 deadlines by some of the networks. Shirley might have some other insights associated with that as well, relative to some of the risk tools for that.
Madeline, you're exactly right. What we're hearing as we talk to bankers is that at this point they're really concentrating on that international use case and rolling out the cards to their customers who travel internationally. But they are making great headway with preparing for fuller rollout.
Great. And the second question which I'm seeing here is, you talked in general about fraud, and you had a little bit about the Mexico and U.S. markets. Do you have any additional stats for the U.S. market in specific, such as how likely is a cardholder to leave the issuing system? I'm kind of paraphrasing here. So basically, I think the question is, you talked in general about fraud. Do you have any more specific stats for my market, which is the U.S.?
Paul, that's a great question. Thanks to whoever came up with that one. The focus of the research that was done was based on fraud as well as the consumer's reaction to the fraud if they had experienced it. And so I'd like to share a little bit of information from that study. For example, the propensity for that card after the fraud experience to go to back of wallet, 46% of consumers in the U.S. use cash or another payment method after they experience fraud. And in terms of changing providers, 16% of men said they changed providers after experiencing fraud. 5% of women said that they changed providers. I'm not sure why there was that disparity in the gender, but we did see that. And then there was good news as well. Consumers are much more aware of fraud than they have been in prior years, and they are very concerned about identity theft. And they indicated in very large majorities that they're willing to partner with their financial institutions, and they really want to receive fraud alerts and work with their financial institution to fight fraud. And they indicated in large percentages that they want to do that via email, SMS, text messages, and phone calls. So with smartphones becoming more and more widespread, I think that the banks are in a great position, issuers are in a great position to enlist their consumer base to help them in this battle against fraud. I hope I didn't ramble on too long there.
No, that was a good answer. It was interesting the difference between males and females, which I can't quite explain myself. But they were the only questions we had coming through. Thank you, everyone, for attending. I hope you enjoyed it as much as I did presenting it. And if there's any questions, please feel free to reach out to your customer manager or directly to myself or Mike Meekin. We will follow with a quick email summarizing our thoughts, and that should be with you within the next 24 hours. So I would like to say thank you to both Madeline and to Shirley as well, and thank you to yourselves for attending this webinar today.